cable market, that is the GBPUSD. And remember that we had we had a sell position at the beginning of the week before we had this buy position triggered during the early hours of yesterday's trading session, giving us some significant amount of profit before this bearish momentum began a couple of hours ago, which was as a result of the UK data that came in this morning. So at this point, all our buy positions have been closed with a minimum gain of about 80 pips due to the pound sterling facing bearish pressure following the release of the UK data indicating a decrease in annual inflation as measured by the consumer price index from 4.6% to 3.9% in November. We will now exercise patience at this juncture and observe market reaction around this area before making any informed decisions. Now, for the sake of those who are not part of our earlier sessions and do want to have an idea into what really happened at the beginning of the week and of course what led to the decisions we make, let's run through what really happened at the beginning of the week before we go into the details of what our next course of action will be. Now, if you look at the structure here at the beginning of the week, we had the situation where price action was confined within the 1.2700 level and of course the 1.266500 area, giving us a flat range to work with. And usually whenever we identify this kind of flat range, it emphasizes the level of uncertainty that is going on in the market at that particular point in time. And usually when we have this, we just have to exercise patience and wait for signals, which of course will come in the form of either a breakdown of the support line to give us an opportunity to sell, or the breakout of the resistance line to give us an opportunity to buy. And look at what we saw here at the beginning of the week. We had a sell position triggered after we saw price break down, retest the structure, and in fact price moved about 35 pips thereabout before the bullish momentum came in. And if you had moved your stop losses, the worst case scenario here was a break even on that sell position. And during our our session on Monday, I did mention that if price action climbs back above the support line at the 1.2665, that is a breakout and retest, giving us signs that sellers have lost the momentum. We look out for buying opportunities there. Then we added more positions at the breakout of the 1.27 and of course added a final one yesterday at the breakout of the 1.27350, which led into some series of lower highs that led into the breakdown of that ascending trend line that was supporting our bullish momentum since the beginning of this week. Now at this point we are in no positions right now, and you shouldn't be. And let's see how we will plan for today's trading session. So as it is right now, I am of the opinion that market participants, following the sharp reaction to the UK data this morning, at this point they will now be already digesting the implication of this data, and if a deep understanding of what is going on and the implication of this data will now give way for another trading opportunity. And as you will see right now, price action is back into the support line of the range we identified at the beginning of the week. Remember, we had this range marked out at the beginning of the week, and right now price action is back into the support line of that range, which we have here. And as soon as price got into the structure, we begin to notice the emergence of buy pressure. Now look at the nature of these candles in the last 1, 2, 3, 4 hours in this market. You will see sharp rejections of that zone around the 1.26650 level, and the lowest point price action has been for this week is at the 1.2630 level. And if buy pressure persists around this area, then we are going to be having a new higher low, which could be a platform to begin the next wave of bullish momentum, hereby making this bearish momentum the retracement of that impulsive leg that started the week to incite another wave of bullish momentum. Well, for me on the GBPUSD, I still maintain a bullish bias. Remember what we saw at the beginning of the week after draw. Zooming out on this chart, we saw the bullish momentum that started on Wednesday of last week trading session, where we said the bearish momentum we saw that started on Friday may be as a result of a retracement move. And in fact, to project where the retracement phase will end, we did use our Fibonacci retracement tool, run it through the previous impulse leg and aim at our golden zone area, which is exactly between the 50 and the 78.6% of the impulse leg, which if you do it correctly, we should have a situation where between the 1.265 and the 1.25650 level will be an area we shall be looking out for buying opportunities. And you saw what happened here on Tuesday. We saw that as soon as price got into between the 50% retracement and the 61.8% retracement, we begin to notice some buy pressure resume around this area, resulting into that impulsive leg we saw here. Now, as it is right now, price action is back into this area, and if price maintain itself above this 1.263, I'm still going to maintain a bullish bias in this market. So at this juncture, zooming into how the market is reacting to the 1.2665, I want to see something like a reversal setup to join that uptrend move. Now, if we do join the uptrend move, please note that we want to exercise patience as soon as price action gets into this ascending trend line. Remember, price broke down the structure about 4 to 5 hours ago, and we could see price come back into the structure to incite a downtrend move. So because of this, so as soon as price gets into the structure, that area between the 1.27 and the ascending trend line, move all stop losses, secure your positions while we wait to see how the market will react to that trend line. If it breaks out of the trend line, then this will welcome more buying opportunities. And if selling pressure persists below the trend line and we see signs that buyers are finding it difficult to break out of that trend line, this could incite a sell-off to the downside. So let's take note of this situation. Now, going back to where price action is right here, where we have been noticing buy pressure, I have a simple setup that we will be using to guide our trading decision for today on the 1 hour time, on the 15 minutes time frame, sorry. So when we scale down into the 15 minutes time frame, you will begin to see an interesting situation unfold behind the scenes. Now on the 15 minutes time frame, this is what I have. Following the impulsive move that brought us into this point, you will see price action was confined within the 1.267 and the 1.26510 area. As you will see, we had a little bit of consolidation phase around that area before price action broke out of the 1.267 here, looking more like a false breakout at this juncture. Now, if price action climbs back above the 1.267, I have a buy stop order above the structure to capitalize on an uptrend continuation. However, if the market says otherwise and price drops below the 1.26510 level, then this will welcome some sell positions in this particular market. So let's see how the market will play out today, as our center of focus is between the 1.267 and the 1.26510 area. Now, there's one more thing I would like to show you on the 1 hour time frame. If price action ever breaks down that structure, please note that if price continues to drop and gets into the 1.26 area, which interestingly shares a confluence with that ascending trend line we spotted on the higher time frame, move all stop losses to to secure your sell positions and wait to see how the market will react to the structure. A breakdown retest could welcome selling opportunities, and if reversal patterns is identified above it, then this would be a sign that buyers are still strong and could welcome more buying opportunities. So let's mark out this level. Keep this in mind as we continue to monitor price action at this area. So this is my view on the GBPUSD. Let me bring back the 15 minutes time frame for those who would like to mark out these levels on their chart.